But I promised my whole school to sing at our prom. He's just got to or I'll never be able to speak to my friends again.
Kid, you know how many schools want David to sing at their proms? There's just not enough days in the year.
Coming from the floor of the CME group, it's Wolfman Wednesday. I'm Eric Wolfman Wilkinson. Let's get in the zone, the cash money zone. Everybody's talking about equities and commodities going up right now. Well, why is that? Right now we're seeing a lot of good economic data come out. Today we had better than expected ISM, kind of blew it out of the park. We also had better than expected GDP. All these things are causing a lift in the equities. These equities are starting to rise. Treasuries are starting to sell off. I tweeted it out yesterday. I'm almost becoming really bullish on equities just because of the economic data we came out. The action in the Treasury market yesterday, we rallied up really hard, slammed back down just on the consumer confidence and retail sales number. Today we get again, like I said, the ISM GDP came out better. It gives more momentum to the upside. We talked about this. I wish I could have talked to you guys a couple other times, but I was talking about that S&P numbers at 1363. We came up there, settled it, bounced through that. The bulls have finally pushed through. We're trading up into the 1370s now. My next resistance on those S&Ps I talked about before, 1386. That's going to be the next resistance on the upside. I think we're going to test that. If we get through there, 1400 is almost inevitable, all right? Then we have the treasuries. Treasuries have come off. It looks like they're going to trade down to the early February lows. We've started to see that confirmation of the top in the on the technical analysis for the treasuries. They're going to start coming off. Looks like gold's starting to see a bit of weakness also. It's going to look to test that 1700. But we're also here in the corn. Corn's starting to rally. Actually, they came off quite a bit since the morning. As the dollar started weakening, all commodities started spiking. We saw oil spike. But then we just got the crude distillate number. All the distillates, we got a big pile up on the inventories in crude. That's why you're seeing crude oil fall off into the $105 handle. What does all this mean? Well, we were talking about, I was going back and forth with Keith McCullough this morning. Well, there's no inflation, even though we're seeing all these commodity prices rise. We got $5 gas in some places. Well, why is that? Well, it's because we saw yesterday in the Case-Shiller home price index. Those prices keep going down, and as long as we price inflation off of depreciating housing prices, all those commodities that are rising are getting neutralized, even though you at home are feeling it twice, because when you go to sell your house, you're losing money. When you're going to pay the pump at $100 a gallon, you're going to be eating it, all right? Take that. Well, that's about all I got for you. I'll give you guys a couple numbers. We got the S&Ps like I talked about. S&Ps, that 1363 area is going to be basically your pivot right now. If we come down, that's going to act as a bit of a support. But I still think you're going to see that 1386 on the upside, maybe even today, tomorrow quite possibly. But today is going to be a very key day for technical analysis. We've got these bonds confirming a sell-off. Looks like they're going to trade back down. S&Ps have broken the resistance on the upside. We're going to be able to see that upside of 1382, all right? Or 1386. If you can't take that, take it easy.